Matthew and Jennifer Pearson. We've got our two kiddos up here. One's hiding behind me. This is Evie.
It's
and,
okay.
and
There's
Beckett.
only hundreds of people online watching.
I don't think he minds too much, but this isn't her.
Okay, that's okay. Just
Well,
hide
you saw
behind
Her
it.
deal. So they can go. Y'all can go play on the iPad now if you want to.
And Beckett. And Evie and Beckett.
Yeah, Evie and Beckett. And
Hey,
we
why don't you just draw over here while he's talking.
we got out of school. We were married right before I got out of grad school. We're doing our kind of career thing for 6 years, just kind of grinding on that. And at that point, we didn't have any kids yet, so we were kind of just using all available time for that and whatever we were doing. And then they came along, and we kind of got 2.5 years in. I think he was 6 months, and she was 2.5, and it just wasn't working anymore. Our jobs were still expecting all of that grinding time because we'd set that as the bar, and we were kind of outsourcing raising them, I guess you could say. Like, there was nothing else to outsource, so we decided that was enough of that, and we've traded positions a couple times. She left her job for 18 months and then went back. I left mine, and then about a year later, we found Lifestyles. Her mom had been a member for 4 years and had been constantly telling us we needed to get involved, but it like I said, it took her 4 years to get us to listen.
Now, wait a minute. Your mom encouraged you to join Lifestyles, right? Okay, now I know a little bit about your story, but weren't you at TI before?
Yes, yeah.
Okay, you were at TI.
Yep.
And you know how many TI people there are in
I
Lifestyles?
know now. Yeah, it was amazing.
Oh, okay.
My,
Well, I'm surprised that wasn't the way that
Yeah,
you
no,
were introduced to Lifestyles.
I knew several, and
Yeah.
several that I worked with almost every day for a couple years. That
Did you know that they were members when you were working with them?
not until I joined.
Oh, okay.
So yeah, we get here and I'm in the 2-day seminar, and like they're going through showing all the multifamily mentors and stuff, and at the time Kevin Chalmers was a national mentor, and I'm like, I know that guy. So he was the first email I sent when I got through all that, and that's been great. Just having people that I
Well, and it's
already know.
encouraging to know that hey, this isn't just some, organization that.
Yeah, no, I was.
It lended some legitimacy to what was going on around
It
here.
definitely helped. I mean, I was really excited to come out of the 2-day, but there's always that little voice in the back that's like, is this for real? And so it took me a little while, but it definitely shortened that time that I knew people that were involved that I trusted. And I mean, I trust her mom. Hopefully she's watching and didn't expect any different answer from that one.
So you worked at McAfee, right? That's the virus place?
I work at
She still works
Oh, you
there.
still work there. So you're the one in charge of coronavirus?
No.
Oh.
No. I'm in charge of a lot of things, but that's not one of them.
Okay.
Yeah, so no, we've been, our main goal right now is to get her out of there because she's pretty much done with it.
Okay,
But,
cool.
but right now that's where we are, and we're looking for our second one. We're going to talk about our first one that we led as lead investors today, which actually just came on the market this week.
So really quickly, I see you invested in 10 deals of passive first.
Yep, that's right.
So you were a passive before you decided to be a lead, right?
Yes.
So,
that
and
was-
I just want new people to know, a lot of our lead investors, they'll invest with somebody else first, watch how the whole thing happens. They go, you know what? Those guys aren't doing that much work. Maybe I want to do it, right?
Basically, yeah. So we jumped into 5 passive investments right off the bat before we decided that we wanted to do it ourselves.
Okay.
And since then, we've mostly been saving for our own investments, but we found some good ones sprinkled along the way that we
So
couldn't
it's
pass
pretty
up.
cool. You have a syndication, you have 10 passives, all within 2 years of joining so far, right?
Yeah, we were trying to keep the grass from growing under our feet.
No, you took action. It's good.
Yep.
Cool.
So no, yeah, it was 6 months, I think, after we joined that I signed up for the lead program. So
Okay.
it didn't take us
So
too
within
long.
6 months, you decided, I don't want to just be passive. I want to actually do my own syndication.
Yep.
Okay,
we
cool.
wanted to get it going so we could get us both out of
Because I get
work.
this question a lot, and that's why I want people to hear this.
Mhm.
You don't want to become a lead.
And the hardest one to do was the first one.
Yes.
Well, yes.
Yeah.
And
It-
timing.
yeah,
Yeah.
getting all that, yeah. The first one was the hardest.
Yeah, it always is. And the more you do, John knows this, the more you do, the easier it gets, right? And-
Right, yeah. The money
No,
tree isn't.
No, that somebody sells something the way I understand it. You got to keep moving it. That's right. You're always harvesting and planting,
So is this
in a
the
true
first one?
Aggie way, right?
Is this the first one they led on?
This is our first one, yep. So we picked it up January of 2020. So
Okay.
like I think it was like 55 days before the lockdown orders started. Picked it up.
Who loves when we show you these COVID deals? I love disease field deals.
Yeah. It felt like it was the next day, like we
Oh,
triggered
yeah.
some Armageddon or something
Yep.
by closing. But yeah, no, we closed on it, and like I said, it's listed for sale right now. The interest rates were really good then. I mean, 4.06 was a great rate. and
So
they're
here we
crazy now.
are. You're already selling it a year later.
2 years. Yeah.
2 years. That's good, though. That's the goal.
Yeah, and that was our plan going in. We were aiming for like a 1 to 3 year hold, and skewing towards the front side of that. We wanted to get to a year just to get past any
Right.
capital gain
Oh,
stuff, right?
and
So
you had to delay it because COVID was going on.
that didn't
so-
help the plan, yeah. But it seemed like at first, we'll go through this in a minute, but it seemed like the plan was going to be like, okay, well, this will be a 5-year plan instead of a 1 to 3 year plan.
Right.
But it didn't work out that way, and you never know what's going to do because prices took off after COVID.
It's
We
a
just
good
had to
thing,
get
yeah.
through it. So yeah, we worked through it, and it was definitely a kind of a trial by fire. But
So in this deal, it's a little 38 unit, right?
Yep.
And it's a great year build, 84, which is
Yes.
solid. 1.25 million. Did you come up with that money by yourself?
no, we had 30 investors.
30 investors. They all from here in Dallas?
Most of them, but we've got some around Texas, and we have one out-of-state investor.
What state are they from?
I think it's Utah.
Utah? Okay, cool. And that's what I want to say. People watching online, you can be from anywhere to be in this deal. It doesn't matter. What was your lowest investor in the deal?
Their investment amount?
Yep.
25K.
Who likes that you can put 25K in? Give them a hand for helping the little guy out. Not everybody has a lot of money.
Yeah, we were trying to kind of build a broader net than we had to, so we asked some of our bigger investors to turn down their
Yeah,
enthusiasm
so
a
you
little
fit
bit.
a couple
yeah,
little guys.
Exactly.
And
yeah.
I appreciate that. Could you just, because you have like 30 investors, right?
Mhm.
Could you, like, what kind of career fields are these people in? Are they like doctors and lawyers only, or are they like truck drivers, or do you remember a couple careers that kind of
mean,
share that?
They were kind of all over the map. I mean, we've got a lot of, like you said, Texans. We got a lot of engineers and things like that. Couple from medical field. But yeah, I mean, really everything. Like there
Right.
really wasn't a. This is where most people.
So out of them 30
fit.
people, were any of them like this their first investment?
Oh yeah, yeah. We had.
Oh, you were in that one, Jack? That's my number one. That was your first one? Okay.
Yeah, we had
And
quite a
look,
few.
he grew his hair like a hippie now.
I know, right? Jack looks totally different.
Yeah. I know. Well, you don't have a job anymore,
That's
so
right.
you don't have to.
Yep. No, we're counting on that hair.
Yeah.
We got a tour tomorrow, so you should just come out and kind of stand out there with us.
Okay, yeah, that's what I always want to get across, because sometimes people watching like, well, I don't have $1 million like these guys. No, there's a bunch of people.
Yeah.
Yep.
Yep. We definitely couldn't have done it without them.
Okay. What do we have next here?
Let's see. We got the basic numbers here. This is the current levels once we got through all of the COVID mess.
So
This-
even with COVID, you're still making, 6.7% return tax free.
yeah, that's right. Yeah. So
Yeah,
up,
so some of you guys, like all these other businesses, were going out of business, losing money. He still made a solid, close to 7% return.
yeah, and so far we've distributed like 8.5% total over the last 20 months or so.
Okay.
So we were doing our best to kind of do what we could, right?
Right.
I mean, had to hold a lot back just because there was so much unknown. Here's
Here's
kind
some
of the
pictures.
before and after. So I mean, it's a good property. I mean, it's 84, so there's a lot of benefits like
Mm-hmm.
PVC plumbing, copper pipes, all that good stuff, copper wiring. It kind of had that kind of 80s feel to it, kind of the brown with the brown with the brown with a little bit of red. So we decided to change it up and brighten it up a little bit. So we just kind of painted the exterior, changed the signage, changed the name. It was called Oakland Oaks before.
Why did you change the name?
There was
Well,
like
there were
3 apartments called Oakland something because it's on Oakland.
it's on Oakland Drive,
Oh, I
and there were
see.
like 3 apartment complexes all called Oakland something or other.
So what- what'd you
to
rebrand it? What's
distinguish
the name?
yourself.
Exactly. So we call it Terraces at Shady Grove now because it's right off of Shady Grove Road,
Okay.
which is a fairly large road in South Irving.
Sure.
But yeah, like the other properties that were on the street that were called Oakland something or other were not things we wanted to be compared to.
Right.
So
You want to be
we
distinct.
wanted to stand out from that. And then, yeah, here's what we did with the inside. So again, the insides were pretty much brown on brown on brown. And then we kind of moved to the gray walls with white cabinets that really makes the kitchens look bigger because it doesn't
Who loves
have
that modern
big
gray
kitchens.
color? Yeah.
Yeah, no, it's been great with adding the backsplash, black appliances, white cabinets, and we didn't have to change the faces on the cabinets or anything
And
either.
guys, just adding these little pull handles make it look so much more modern. It
Yep.
really does. Little
Yeah,
things.
it's amazing what those little hardware things will do.
You know what I noticed about this? I mean, other than the obvious that the colors of the cabinets are different, it's more updated. You got tile on the backsplash, but the thing that really jumped out at me was that breaker panel.
Yeah.
You painted it
Yeah.
so it blend in, not where it would stand out like it was. So
We did make sure not to paint it shut though. Because most
I've
of
seen that.
most of the ones we saw, that was a feature, and we had to like break it open just about. That paint is stronger than it looks.
So the big thing on this slide, especially if you're new, there's all kind of confusing numbers you're not going to understand until you come to the seminar where I break down all this NOI and stuff. But really it comes down to the bottom line, guys. What is it going to put in my pocket? You know, so even during the worst times, the projections here, they're going to go from a 5% return to a 7% return, which is decent. But really, is the big bang for their buck is going to be when they sell it or refi it, whatever their plan is.
Yep.
And you're looking for a sale right now.
But just because where the market is right now, and we're right at our expected time frame,
Right, and you
that's our
probably want to
primary.
go bigger now, right?
Yeah, exactly.
And that's something you're going
It's-
to learn this weekend. It's called the economies of scale. You don't want to keep the small ones. You want to get bigger and bigger and bigger because the more bigger you get, the easier it is for them to run it. They buy back more of their time. They want to keep growing as a person.
Exactly. So when we took it over for 38 units, we really can't afford any full-time employees, not maintenance side or on the leasing side as well. So I ended up sharing a maintenance person with another lead, and then he ended up on my payroll full-time for a little bit just because we had so much turning work during COVID. And then now he's working again with another lifestyles lead. So it helps having that community just because we can share half a person, whereas you can't like cut somebody in half and just say, I'll take you full-time.
Right.
Doesn't really work.
And you didn't have an office on site.
There was no office on site. We had a little 10 by 14 maintenance shed.
Perfect.
And then we contracted a leasing advertising person from a local property management company. Because speaking Spanish is not yet one of my skills, and that is definitely required at this particular property.
And there's one thing that's very powerful in this, and most people don't understand this, is we teach something called best product, best price. We're going to attract the best people. And you can see from the before to after pictures how you can see it's just a better product. But one thing that we do different in lifestyles that other owner-operators in the outside world don't do is most people, the way they try to make money is by cutting expenses. If you notice what he does, his expenses are going up every single year. Because to run a property properly, you've got to put money back into the asset. Does that make sense to y'all? But most people in the outside world, they learn to Dave Ramsey, the beans and rice. They starve it, fire the good people, try to be cheap, keep the crappy Browns from 1984. You understand that? But by them doing this, it's going to keep raising up how much they're going to be able to make. Okay?
Exactly, yeah. Because, I mean, it's, again, the expenses increase every year, right?
Yep.
Especially property taxes. They're
Yep.
getting nuts.
Yep. Awesome. So here's what it's going to really do for you guys.
Yeah, so this was our kind of year one, year two, year three. Obviously, year one with COVID, we had some less than ideal performance, but
Right.
everybody's going through that. But then we kind of, as soon as the calendar turned to 2021, we kind of like took off like a rocket ship and haven't really looked back. We're 100% occupied. All of our leases that we've turned have been completely at market rents. We've started implementing RUBS. So we've been able to, like you said, increase that income,
Yep.
which really is what's bringing up the value of the property.
So really with 3 years, plus you're going to have cash flow on top of this, everybody's going to double their money.
Yep, that's what we're hoping.
Who likes the idea of doubling your money? What's the technical term for that?
Winning.
Pee in your pants exciting. Not poop in your pants. That's only the Cubans in Miami can say that. But it is life-changing. Do you like that? No? Your answer is what the old guys like that say depends. That's okay. That's what makes it fun.
That's okay.
Awesome.
Don't forget snacks.
Yeah.
Sugar up, huh?
He's got Cheeto hands already.
Okay, Cheeto
Yeah.
Hands is a game winner. Awesome.
But yeah, we're aiming to close on day one of year three.
Day one of year
Because that's
three.
when our prepayment
That-
completely
yeah.
falls off.
And that's a key. Is why are they holding it 3 years? Their loan has a prepayment penalty if they sell it too soon, because the bank wants to make some money.
Yep.
Right? Awesome. Let's see what's next. Quick.
So yeah, we kind of felt like the unique part of the story is kind of dealing with this through COVID right after we closed on the property. This is our first property as lead investors. I'm heavily involved because it's only 38 units. We have a couple part-time staff, and it was like 54 days that they started that lockdown order in Dallas County. So I'm having to print off these like essential personnel things for our part-time employees so they don't get pulled over and arrested for being outside.
Yeah, I remember that.
And there was a day in April, I still remember it, I went out to the property. I found 5 units that had skipped in one day. They had just taken off. And on a 38-unit property, that's noticeable. I mean, a 100-unit property, okay,
But
it
you
stinks,
know, I see that as a blessing.
it turned out that way, yeah.
Yeah.
It freaked me out for a second. I was like, what have I done kind of
Yeah.
thing? But that was just a few minutes, and then I got on the phone with anybody from LU. It was great. And so, like you said, we turned that into increased appreciation.
Yep.
It was reducing our cash flow right now, but we'll get that back later. So instead of upgrading only 16 units, we upgraded 25. So we were getting much higher market rent on those 25, so we're going to get that money on the back
Yeah,
end.
instead of having to wait for what's called lost lease, he would have to wait 6 months on this one, 8 months on this one to raise the rents. Now he can raise them all right away because there's nobody in there. So it's
Yep.
actually a blessing.
Yeah, that worked out well. And that initial wave we recovered from into the summer, and then there was kind of one more wave into the end of last year. And then since then, we've had no problem leasing our units what we want at what we want.
Awesome.
And yeah, so really what we wanted to get out of all this was, I mean, our time, like everybody else. We had our 2 careers. We had no time to really do anything else. Now we can coach their sports teams, all of their sports teams so far, but either one of the 2 of us has been one of the coaches. We're able to go on trips. We took them down to like Hunt, Texas, and then floated the river in San Marcos. We like going to Mexico a couple times a year, Jamaica. So getting some of that time back, and then once we extract her from her job, then we'll have even more flexibility because then she can kind of meaningfully help me with stuff because I've pretty much been the driving force on that since she's holding down the full-time job still.
Unless she switched jobs like Norton or one of them.
There you go.
I do plan on switching jobs
Okay.
to this.
Yeah.
Yeah. I think she's one and
But you
done.
see light at the end of the tunnel now.
So yeah, right now we're looking for our second property. It's a great time to be a seller. It's a little more challenging if you're looking to be a buyer, but we'll find something. There's always opportunity out there. And while we're looking, we're still continuing to passively invest. With all of these leads all looking for properties, you get to see a lot of opportunity. It's great. And then longer term, we're aiming to retire her from McAfee. And then we'll have time not just to build our business, but to donate to causes that have meaning to us. Like we've done Meals on Wheels in the past, things like that. Just give back some of that time in addition to giving back here as well.
So you're there, you're running the property, you're doing all this work, and you have all these past investors out there. Explain to the people watching for the first time or the people new in the room, how much work did your investors do on this deal?
They wrote me a check at the beginning.
Okay.
And then they had to go to their mailbox and pull money
Oh,
out.
so you actually sent them checks?
No, most of them were direct deposit, so they didn't have to go out
So
to the
they're even
mailbox.
too lazy to do that. Email?
Yeah. Nobody wants the paper dollars anymore.
Are any of your investors in the room today?
Yes.
If
So
you're in the room, raise your
Jax,
hand.
there's several.
Okay,
Bethany and
there's a bunch
Gregor,
of y'all.
Mark,
Look at that.
and
Wow.
Brian and
Probably
Ginny
10
back
of y'all.
there. Let's see, Cheryl and Monty over
Okay.
there. Yeah, we've got quite a
I
few.
know a lot of them folks.
Mm-hmm.
Even Gregor's back there raised his hand, I think. Yeah.
We had a lot of folks that put their faith in us. We're very happy about that.
You let an Aggie invest with you?
We did. We actually, we have actually a couple of Aggies. Our KP's an Aggie as well.
Oh, wow. Okay. Awesome.
We don't discriminate. We are Texas folk, though. We both
So,
went to
so
UT.
you have some Longhorns in there, too?
Well, at least us two.
You're Longhorns?
Uh-huh.
Wow. Okay. Interesting.
Lifestyle brings people together.
They sure do. If you can bring-
There you go.
Well, you know, it's good you guys were in charge because you do the math for them.
Yeah, that's good. Yeah, we'll handle that part.
There you go.
So yeah, on our team here, Ricardo's great with the loans.
Ricardo, raise your hand. That guy there, his company works for, they lent us over $2 billion. You know that?
Yeah, it's nuts.
Yeah.
And like they've been operating for so long. Like they're one of the first people I call when I'm looking at a property because they almost certainly have seen it or have traded it in the past.
Yep.
And so they know a whole lot about it. and then of course, obviously the areas around, what are good areas, what are ones to avoid. So that's worth everything they charge and more, and it's not much. And then Carolyn, our lifestyles agent, she was the one who.
Carolyn's
there
over
she
there.
is.
She's
Say
one of our
hi.
multifamily agents. She does lots of deals up here in Dallas.
So yeah,
She's awesome.
she was great, kind of helping us through this process for the first time. Which again, also Ricardo was right there too, helping us with all the lending stuff because they ask you for kind of this life history of paper at the beginning. And then Richard from Dodson Legal is here too.
Richard, you here?
He's there in
There
the
he
back.
is.
Turn around, Richard. Look, he's rocking like Dockin. Did you see how long that ponytail is?
Yeah.
Yeah, it's longer than yours. I
You
know.
got to watch out for him if he's turning around if you're
Longer
behind
than
him.
yours.
But it looks like he's a Longhorn also. And then Touchstone Property Management is a local property management company. That's who we contracted our leasing kind of resident interaction person from. And then Heritage Construction did all of our exterior renovations. And then Lifetime Tax does our kind of taxes at the end of the year.
Cool.
So yeah, we have a great team. I mean, again, this is all of what they do is like they're experts at it, so we can focus on actually running the property, which is great.
Awesome.
So it is a team sport.
Absolutely, yeah. I mean, there's no way you can do it. Like you can do it all, but it's not going to be good.
You won't be going to Mexico
No,
or
no, no, no.
Jamaica
Yeah, no.
or yeah.
Here, for new folks, just so you understand, one of the most powerful things that we do here at Lifestyles is if Matthew or Jen have any problems, they can go to any of these other lead investors and ask them how to fix that problem. Now you think about it. If you bought an Exxon here and they bought a Sunoco over there, do they share their books and their numbers and everything? No, but here at Lifestyles we do. Is that not powerful? Not only that, there's a group we do every single month before we have this case study. I get like 30 to 40 of these lead investors have a mastermind group and they all share information with each other. Is that pretty cool? So these are things we do at Lifestyles the outside world doesn't.
Yeah, it was immensely helpful, especially during COVID, and a lot of people around didn't really know what to expect or what was going to happen. Nobody was alive the last time something like this happened. So just having
died
all
of
of
COVID?
So like just having everybody there all brainstorming, you get all these different ideas, and
Yep.
I mean you've got, like you said, you've got people from all walks of life. You've got lawyers, you've got accountants, you've got engineers. So like they each kind of bring their own perspective to solving problems that really nobody's got the answer for. And then
Yeah,
Well-
one of the big things is we're proactive. We're not reactive. When COVID hit, Lynn Murrow, our executive vice president, she set up like 4 or 5 webinars, and they'd be like 3 hours long. Everybody watch it. And then 2 weeks later, she'd say, disregard everything. Here's a new rule. And we had to keep making webinars because it kept changing. But who likes that we did that? I mean, it drove our staff crazy, but you know what? We had to have the right information so you guys wouldn't be in trouble.
yeah, no, it was great, and everything was constantly changing, like you said. I mean,
You want to say something, Don? I'm sorry, I cut you off.
Oh, I was just going to reflect back on the meeting we had today. I don't
Yeah.
know, there's like 30, 40 people in there. And everybody was sharing operational experiences, what they'd been through. We were like, how much our taxes had gone up for the year. Just
Yeah, and
just
Sapria needed
how
a
to
new
run
cleaner.
our business. Yeah, yeah. Does anybody want a clean apartment for Sapria this Friday? It's Friday. I hear.
That is the power. You are in a bind. And
Did you find somebody? She got you. That's, yeah,
Yay!
that's the power. It's not always a big thing. Sometimes it's the little things, right? Yeah.
Isn't
Perfect.
that powerful? In 5 minutes,
That's
she
great.
found somebody she needed. She couldn't
That's
find on her
great.
own.
Yeah.
That's cool.
yeah, there's nothing like it. I mean, like I said, when we came to the 2-day, like you get all excited, but you're like, there's no way this can be real,
Right.
right? But then you get into it, and I mean, you're right, yeah. For a one time in your life, something is actually as advertised.
Better than advertised.
Yeah, no, right.
And now when you drive wherever you're going, you're always looking at apartments. Like,
Yep.
yeah.
look at those apartments. Air conditioners up on the roof.
Yep.
You know.
Yeah,
That's
it's
what I-
funny
that's
when
what
your
I
kids
do,
go,
yeah.
Dad, that's a Class C. And they know, right? All right, you want to take some questions?
Sure.
You guys have any questions or people online, either way? Oh, this is my type B
That's it. Okay,
guy.
good, because I really didn't want to hold that mic the way it's positioned. I have 2 questions. So where did you find the property? How did you find it?
So I actually found it through one of the Lifestyles blasts. I know one of the single-family folks was talking about that earlier. For multifamily, they do the same thing. Whenever one of the brokers gets the tag, they can kind of blast it out to leads and IROs and say, if you're interested, get back to us. And then Carolyn gave me the opportunity to bid for the deal, and we ended up getting through the whole marketing process, 2 rounds of bidding. And I think they had like 17 offers, something like that. So
All right, he beat out 17 other people. Full price or more, right?
Yep.
See, that's what I teach in seminars. Don't be cheap. You'll never get a deal.
Okay.
Yep.
Oh, he was asking how much you personally put into the deal. I think
Yeah,
you
how much
said
money do you put in there, Matthew? What's
So-
skin in the game?
Like with Lifestyles on your first lead deal, you have to put in 15% of the capital. So we ended up putting in like $186,000 into
To-
this one. So we got
And
some
not
skin in
like
the game.
48 cents like the last lady?
No, we rounded off the cents and sent those over for lunch.
anybody back here.
Yeah, I'm just curious as to how close you came in on budget on the capital improvements and updates.
So it's interesting,
question.
right? Because we turned like 9 more units than we expected to. So as far as the actual budget, if I look back at what we thought we were actually going to use, it ended up being pretty close to what we had expected. And then I had built in a significant buffer, so we still have enough to replace a roof or replace major systems if we had to, if something were to go wrong. So as far as the estimates, they were really right on, which is really the contractors that we were working with were great. They gave us the right number up front, and that's what it was.
And what you got to realize, whenever we do a project, we do our due diligence where we have 30 days of feasibility. We figure out exactly what it's going to cost us to do something, and then we always pad the numbers. We always are conservative. We'll raise extra capital for the what ifs. Who likes that we do it that way? Yeah, we're very cautious on our numbers.
Yeah, we were very happy we did that when COVID started.
Yeah. Great
yeah.
questions. Anybody else? One more. There we go. Go for it, Terry.
So I think it was back on the first slide. I think it was under rehab. It said $0 in loan. Is that significant or is that good?
So explain that to him. Yeah.
So certain types of loans, you can actually roll in some of your capital money, or your capital budget into the loan. We had a Freddie small balance loan, which doesn't do that. So all of our capital dollars we had to raise as part of the equity raise. But if we were able to, then we could have kind of reduced the overall amount we had to pull from investors. The returns get a little better.
The returns would have been better. So, and I teach that on Sunday in my seminar. You remember, Terry, you've been there, right? So I sit there and show the rookie from the more experienced guys how sometimes you can add in loans, sometimes you can't. So that's the exact situation.
We would have liked to.
Great question.
But
Yeah.
It just didn't work out.
Well, you'll do that on your next one because it'll be bigger.
Yeah.
Yeah, with
I
the
mean,
bigger
that's the
deals,
thing.
it's
bigger
As
the
you
easier.
get more
property,
experience,
the
as
more
you get,
likely
the bank's
you-
going to like them more.
The more likely you are to be able to do
Yep.
that.
Yep.
You're talking about these email blasts. I just went through my email. There's been 2 single-family blasts today
Yeah.
from the Dallas office and 2 multifamily blasts today from the Dallas office.
Yeah.
So
They come
that happens
often.
every single day.
I think I had
And
some from
if you're new
Phoenix.
people, I'll cover that this weekend. There's a lot. I know there's a lot of words they're using up here you don't understand. I'll break it down really simple so you all understand that this weekend. Yep. Good.
Anybody else?
One more. Uh-oh, it's Leo.
Leo. Okay.
Leo, keep it to like 5 sentences.
Yeah,
I don't want a 40-minute dissertation on the Ode to Joy.
I know you've been quiet for too long.
Matthew, when it was the lockdown, did you all keep your apartments pretty full? I mean, were y'all rehabbing those units all, or how did that work?
Yeah, so going into it, I mean, the property was in decent condition, and it was a 97% occupied when we took it over. So the plan was to, as David was saying, like as leases fall off, that's when we're upgrading. But then lockdown happened mid-April. We end up with 5 or 6 units that are empty all at once, and there was a scramble for resources at that point because I wasn't planning on needing to do that. But again, with the community I was able to find, and I think in April we ended up turning 5 of those units in 1 month and leasing them on May 1st. So we were able to climb out of that hole really quickly into summer. And we were 95, 97% in the summer, and then we had another kind of wave of softening where we could find residents, but we couldn't find qualified residents. Right. And it doesn't make sense to put somebody in there who can't pay.
Right, and you don't realize, what we teach you is we don't do high-end stuff, we don't do low-end stuff. We do the middle class. And who is the middle class? Your essential workers. Can we be discriminatory and just pick essential workers? Yes, we can. Fair housing law, right? We're not talking about race, religion, color, creed, but they must financially qualify. So I'm sorry those people lost their jobs, but they're not qualified. So he has the right to pick, people that are only qualified. So I'd rather be picky than put somebody in there who can't pay. Does that make sense?
Yep.
This is why we survived COVID while other people don't. And I'll really go into that this weekend about never lose money, why we survived while other people were hurting during COVID.